Hello and welcome to today's financial report. Let's start with Wall Street overnight. The three major indices basically closed flat, with the Nasdaq at 26,363 points, the S&P 500 at 7,722, and the Dow barely moving. But if you look beneath the surface, the pre-market futures were already sending a slightly weaker signal, especially with Nasdaq futures down 0.71%, suggesting tech stocks face some short-term pullback pressure. On individual names, Nvidia fell 0.69% to close near $219. Over a 7-day window though, the stock is still up more than 10%. The drivers behind this are twofold. First, AI infrastructure capital spending continues to expand, with the market expecting Microsoft, Amazon, and Meta to invest a combined $140 billion in AI by 2026. Second, Elon Musk publicly stated on August 5 that SpaceX's AI build-out will be entirely based on Nvidia chips, and he praised the Vera Rubin architecture highly. But here's the thing, Nvidia has now risen for 5 consecutive sessions with cumulative gains exceeding 15%. Short-term overbought signals are pretty clear, and the risk-reward of chasing at these levels is not attractive. Over in Asia, Korean tech stocks saw sharp swings. SK Hynix plunged 10.4% in a single day, and Samsung Electronics fell 6.3%. This looks like classic profit-taking and risk aversion during Asian trading hours, and it could spill over into sentiment for A-share semiconductor equipment and materials names. Now let's look at the macro picture. The 10-year Treasury yield is at 4.64%, still range-bound between 4.60 and 4.65. It hasn't broken through the key 4.70 resistance level, which means liquidity conditions remain in a tight balance rather than a tightening trend. The VIX is at 15.97, within the normal range, indicating steady and slightly optimistic market sentiment, not panic territory. The dollar index has stabilized at 99.78 after breaking below the 100 handle. The weak dollar regime is intact, which creates a friendly environment for emerging market assets, and it also eases pressure on the RMB exchange rate. On commodities, WTI crude rose 2.5% to $76.59, and Brent climbed to $81.19, up 2.72%. The rebound is mainly driven by the back-and-forth in US-Iran talks, with geopolitical uncertainty providing support. But global demand expectations remain soft, so upside is limited. Gold is at $4,303, slightly lower by 0.28%, holding above the 4,300 level in a high-level consolidation, and that range-bound pattern remains intact. Putting it all together, the global market can be characterized as risk-on. Risk appetite is improving. But if the 10-year yield breaks above 4.70 and the VIX moves above 18 simultaneously, that logic would be undermined, and global risk assets would face a stress test. Back to China. The RMB is holding firm, with onshore at 6.7374 and offshore at 6.7461. Over the past 7 days, the offshore RMB has appreciated about 0.19%. A weaker dollar combined with a stronger RMB helps ease capital outflow pressure and creates a favorable environment for northbound flows into A-shares. However, there are two things on the US-China front that deserve close attention. First, the Trump administration is expected to announce as early as today a 15% tariff on polysilicon with a price floor, which would directly impact China's solar panel and semiconductor supply chains. Second, the FCC is pushing forward with a ban on Chinese-made optical transceivers, a critical component for data centers, with a target of 2026. If implemented, this would affect the export expectations of Chinese optical communication companies. China has already announced countermeasures against 7 U.S. entities. Both policies create uncertainty for A-share semiconductor materials, photovoltaic polysilicon, and optical communication sectors, but for now this is more of an expectation shock than an actual impact, so we need to track the implementation details. For today's A-share open, our call is a flat to firm start. The Shanghai Composite closed up 0.56% yesterday, holding above the 3,900 level, and the short-term trend is intact. The offshore RMB is trading firm around 6.74, so foreign sentiment is stable. The 10-year yield hasn't broken key levels, and U.S. cash equities closed flat overnight, so external drag is limited. But if Nasdaq futures extend losses beyond 1% at the open, or if the offshore RMB weakens past 6.76, then any gap up could be erased and the market could shift into weak consolidation. For today's trading direction, the Shanghai Composite is expected to trade in the 38.80 to 39.20 range with a firm bias. Two sectors deserve attention. First, oil refining and oilfield services. The rebound in crude prices directly improves upstream earnings expectations, and this sector has low correlation with high-flying tech names like AI and semiconductors. It offers both defensive and re-rating logic. Second, power equipment. The expansion of data centers and AI infrastructure is driving solid demand for power equipment, and the sector has pulled back sufficiently, so there's technical room for a rebound. What to avoid today: semiconductor equipment and materials names that have run up too much too fast. Nvidia is up 10% in 7 days but turned lower yesterday, and SK Hynix's 10% plunge shows profit-taking pressure in the Asian semiconductor chain. The A-share semiconductor equipment and materials sector has accumulated significant gains, so there's a risk of catch-down today. Optical communication stocks also need caution, as the FCC ban news is a substantive policy negative that will weigh on sentiment in the near term. On northbound flows, the probability of net inflows today is roughly 60%. The core rationale is that the offshore RMB remains firm, and the trend of foreign investors adding Chinese assets in a weak dollar environment is unchanged. If the RMB continues to strengthen towards 6.73 after the open, the probability of net inflows increases further. But if the RMB quickly weakens past 6.76, foreign capital could turn to net outflows. Let me wrap up with the big picture. The 10-year yield hasn't broken out, the VIX is normal, and the dollar is weak below 100. The risk-on narrative continues. But within A-shares, high-flying tech names are diverging, and capital is rotating toward oil and power equipment. For today, we assign a 30% probability of an up day, 45% for a sideways day, and 25% for a down day. Keep position sizes in check, don't chase strength, and wait for pullback confirmation before adding exposure. That's all for today's financial report. Thank you for watching, and we'll see you next time.